Institutions and institutional investors are not fazed at all by our crypto volatility. In fact, they're looking at our cute little $4 trillion market cap and they're figuring out ways to fully vertically integrate crypto into traditional finance. We're actually going to break down a little bit about Citibank, Blackrock, and one of the largest Bitcoin treasury strategies. I'm WendyO. I talk everything crypto every single day. So make sure to like this video, subscribe, set alert so you don't miss more, and drop me a comment because I read them all and I do my best to respond to them. Earlier in the live stream, we talked about Blackrock. They're basically talking about tokenizing everything and they're going to be creating their own chain. Great, fine, fantastic. But at the same time, BitMine Immersion announces Ethereum holdings exceeding 3.03 million tokens. That's more of Ethereum's current supply at about 2.25%. And they want to hold 5%. The reason why is they want to go ahead and stake this stuff and earn that passive rewards. Dividends, if you want to call it that. And we'll see this happen for Solana as well, or any crypto that you can actually stake. And these companies, they're not going to be liquidating their holdings. They're just going to hold these through unrealized gains and losses. So if in fact we are in a bear market, they don't care. Anyways, their total crypto and cash holdings is now at $12.9 billion. And the recent Ethereum price drop allowed BitMine to buy 202,000 Ethereum. So while everybody was freaking out and using too much leverage, they were just buying the dip, which buying spot or dollar cost averaging will actually allow you to outperform most traders in most cases if you pick the right assets. And that's exactly what BitMine's doing. In this case, it's Ethereum. That's what they're betting on. And again, we're seeing this happen with XRP, Solana, and just other crypto assets in general. And Citibank just announced that they plan to launch their own crypto custody service in 2026. Custody solution will hold native cryptocurrencies on behalf of asset managers and clients, and Citi is also in the early stages of exploring stablecoins. Stablecoins are important because number one, we have law, genius law. And number two, stablecoins is a good indication of what chains are actually being used and liquidity. Because you have to remember, when people are actively trading, they like to cash out into stablecoins because price is flat, doesn't fluctuate. But the bigger picture here is the crypto custody. Right now, we don't have any real crypto custody on any of the crypto exchanges. That's one thing that crypto is lacking. And we're always taught, not your keys, not your coins. But will that messaging change once we have big banks like Citi come into crypto and offer custody with insurance? So this is kind of something for Coinbase and Ripple to get their stuff together and start their own crypto banks. Because the crypto exchanges, they're going to be starting their own banks too. They don't want to get left behind. Why do you think Ripple acquired Hinton Road? Now back to crypto custody. New bill plans to codify Trump's executive order on crypto and private equity in 401k retirement plans. And this is the red side that asked for this. They basically want to make Trump's policy permanent beyond just agency level guidance, as far as people being able to diversify their 401ks in crypto and private equity. But they're going to need the proper custodians to do so. And now once that happens and it's fully law, because right now it's just kind of like a suggestion that companies can look at and be like, hey, we want to do this, then we'll actually be able to see the $8 to $12.5 trillion of 401k money, immersify itself into crypto. And really quickly about Blackrock. So their spot Bitcoin ETF surpassed 100 billion assets under management, which is the fastest growing ETF in history. And Q3, their earnings smash forecast as revenue surges 25%, driven by record iShares ETF demand. Moral of the story here is they're able to profit off of crypto. In the past, they didn't want to trust, or they didn't want to get into crypto because there was no profit to be made, or there was no real legislation or laws that they could be followed. But now, since they can, they're in. So regardless if we're about to enter a crypto bear market or not because of the insane liquidations that happen, moral of the story is traditional finance, institutions, banks, they're completely unfazed and they will be buying more and creating more traditional financial products for you and me. Goodbye.